Hi everyone, welcome back to the channel. It's Sebastien Boyer, the approved guy, and on this video I have a special treat for you. I have Peter Deegan with LendSpark, a nationwide direct lender that specializes in equipment financing and working capital. We're going to get right into it with Pete, so let's get started. Hey Pete, how are you?
Good. How you doing?
Great, man. Thanks for coming on the show.
No problem. Thanks for having me on, Sebastian. Appreciate it.
Definitely, definitely. So, first, if you would just tell us a little bit about yourself and about your company, and then we'll get right into your services and how we can help the business market that's out there right now.
Hey, my name's Pete Deegan. I'm with LendSpark. I've been here for 5 years. I'm one of our sales managers, and we help small and medium-sized businesses get funding for equipment and just general working capital solutions to help grow their business. A lot of the times, we work in conjunction with their local bank and basically fill in the gaps to help them grow in spaces that their bank can't help them.
That's awesome. Thanks for joining us, Pete. So, I'm sure you've seen all types of deals. What size deals does your company finance on the low end and then on the high end?
So I'll start with the equipment side first. For the equipment, I would say our bread and butter is in the $50,000 to $250,000 space. What's unique about us is that a lot of the times we can do what's called an application only program up to 250,000, which means we don't need to take a look at financials, bank statements, all that other stuff that banks might request from you. Simply an application will do on that end.
Okay.
On the working capital side, we're about 500K, 750K is really our median or sweet spot.
Okay.
We can go all the way up to 5 million, but I'd say most of it falls in between that 500 to 750K. As far as documents needed for working capital, it's very light up front as well. Just an application and some bank statements usually gives us enough information to at least get the ball rolling and get a soft offer out to you.
Okay. And then, so there's equipment financing that you guys specialize in, and then that includes vehicles, construction, manufacturing, and medical. And you do both used and new, or only new,
Yeah,
or
so new and used equipment. And equipment is a very broad term for us.
Mhm.
It's not just construction or manufacturing, the bulldozers and trucks of the world, but we do odd end equipment that maybe a bank wouldn't want to do, such as specialty medical equipment. In other cases, some agriculture equipment or even equipment that may not necessarily hold its value, or in some cases, equipment like a walk in freezer that's not really repossessable, if you would.
Okay.
So it's more of an installed piece. So for a number of different reasons, we help fill in the gaps where the bank can't for equipment. That again is a very broad term.
So so on the equipment side, can a startup get access, or can you help a startup get access to funding for equipment?
While we do offer startup financing, it is very rare and it's very tough to get approved. Even if you are approved, rates are a lot higher than the traditional equipment loans that we do because there is such high risk with the startup business. The 2 year mark is really when we see things start to become a little bit more traditional and typical as far as terms and rates go.
Yeah, if you would maybe tell us a case study or one of your clients that you financed on equipment, and a little bit about the case, and then even maybe what the terms looked like for that client.
So recently, I did a loan a couple of weeks ago for a pet crematorium in the Pacific Northwest region, and they were buying an asset, a crematory machine of some sort. It's about $100,000, but it was used. The vendor was located here in Southern California, and with our application only program, so no documents besides the application were needed and the invoice from the dealer, we were able to get the deal done in about 48 hours, start to finish, from application to funding. This was a repeat client of ours, but I think what made it especially different than something the bank would do is that A, it was used equipment and it was something that the bank was not really willing to take as collateral. as you can imagine, a used pet cremator might not be the most sought after asset or remarketable asset in terms of the bank's view. So we took the risk and we did a 60-month loan.
Okay.
We did first and last payment only upfront, so very light on the upfront cost. A lot of other lenders will charge you 10 or 20% down. We're able to do it two payments down. So I think out the door, we were looking at under $3,000 for a $100,000 asset. Again, we got them a 5-year loan, no prepayment penalties, very light doc fee. So all in all, out the door, $3,000. And that did cover, again, two of their payments. So they were, I think the next payment due isn't until February.
That's awesome. Now that situation was probably no doc because you said he was a repeat customer, but typically
Uh,
it isn't a no doc scenario, is it?
it was a no doc scenario with or without them being a repeat customer because it was under the $250,000 mark,
Okay.
uh, non-titled equipment. We just needed the invoice from the dealership and our application filled out.
Hmm.
It helped
So
with their.
obviously there was a personal guarantee.
There is a personal guarantee on all of our equipment loans and working capital loans.
Okay.
There are some cases for equipment only.
Okay.
Uh, you have 10 plus years and previous experience or have previous loans with a corporate guarantee only that we will actually do a corporate only guarantee. I'd say it's probably only about 5 to 7.5% of all of our transactions are corporate only versus personal
Hmm.
because we're dealing in the small to medium sized business space. Not that many have 10 plus years in business.
So to be able to do it on the corporate side, it needs to have 10 plus years. That's the benchmark there. Okay.
Correct.
Do you also look at the business's credit with like Dun and Bradstreet or Experian or Equifax business credit division?
Exactly. So we go and look at the business's credit. We utilize PayNet, which is, I
Pay that.
believe, Experian. Don't quote me on that. That might,
Equifax.
yeah.
I know because remember I coached that, but yeah. So PayNet guys is it's a division of Equifax that equipment lenders look at for financing your equipment with no personal guarantee, or even with the personal guarantee. Typically, they're going to look at that to see payment history on the business side. So
Yeah, to touch on that really quick, for anything over $50,000, we'll typically pull a PayNet report, which details most of your equipment financing and some other business lines of credit or credit cards that you might have. It doesn't give us the detailed information on the lender per se, but it will say if you've missed payments, had write-offs, slow pays, etc. So, and it also says if there's a personal guarantee. So when I was touching back on the corporate guarantee, we're going to look through your PayNet and look at your previous loan history. And if there's a corporate guarantee only on there and you have 10 years in business, we'll probably be able to get you a corp only guarantee.
awesome.
Outside of that, it's hard to get that approved. Most of our loans have a personal guarantee. That does not mean it goes on your personal credit, though.
Hmm.
Uh, it still is a business loan. The only time is in the event of a default, your personal credit would be brought into play with
Right,
this.
right. I understand that. Okay. So then what else, would you be looking at? Are you look again, not on the no doc situation, but on a situation where you're looking at tax returns, bank statements. Again, we're still talking about equipment.
Um, I would say that the biggest thing outside of your standard, your business credit and your time in business is a very big thing for us. The longer the better, obviously. So outside of the typical time in business and the business credit that we touched on before that we look at, another factor that on the full doc package for equipment is profitability of the business. I know a lot of times it's incentivized to maybe not show as great of a profit to help with taxes and whatnot. But if you are showing a loss, it's going to be significantly harder to get a 300, $500,000 equipment financing loan approved if you are showing a loss. Also, we do like to see good AR. If you can show us that, hey, I'm borrowing $300,000 for this new bulldozer, but I have work in progress reports and AR I can show you that supports this purchase. That also helps mitigate any concerns we have. But I think those are the two: profitability and a strong AR, along with strong banks and cash flow, Obviously, we don't want to see that you have a bunch of other loans maybe that are impacting the cash flow in a way that we put you in a worse situation by giving you additional funding.
Sure, of course, that makes sense. Now, a lot of my audience are in the logistics industry, you know, trucks, big rigs, things of that nature. Have you been able to finance and help folks with those types of vehicles and equipment?
Yes, I'd say 2021 especially was a very big year for us in the long haul transportation industry as well. Particularly sleeper trucks and trailers, dry van trailers, reefer units, etc. The only little nuance that we have with long haul trucking, short haul trucking in general, any transportation, is we do account fleet size into that.
Okay.
So if you have only one, two, three trucks in your fleet, and we use Safer to verify power units, it becomes a little bit more of a challenge for us. It's not to say that we can't do it, but we do definitely like to aim at the more established trucking companies, the five plus in the fleet. Our minimum for the fleet requirement is one, so
Hmm.
we will not buy your first truck, but as long as you have some income coming in and you have at least one truck, we can help you out.
Okay.
The bank statements and the cash flow do come into play a lot more if you only have one power unit. If you have three, four, five, I don't need to see bank statements. But if you have only one, I will want to see that you have some healthy cash flow.
Okay, that's good information. All right, so let's switch gears and talk about working capital. So first, in the working capital side, is there any have you or do you guys help with any debt restructure? Is that something you guys do? If someone's, let's say, laden with two or three loans and they want to restructure, is that something you're able to do?
It's not uncommon for us to pay off other debts, especially if they are higher interest, shorter term, hurting the cash flow in a sort of way where it makes sense for us to pay them off.
Mm-hmm.
That being said, if we do have a client that comes, let's say, with four or five cash advances, we're not gonna be the one to come clean them all up and pay everybody off and really help unless we have some really good collateral or the deal really makes sense in a way from a cash flow perspective that if we pay these off, the monthly output or the monthly outlay for all these loans goes down in such a way that it really helps the business. But in most cases, if you have more than two or three loans, we're probably not going to want to restructure those.
Mm-hmm.
Anything, we'll do a supplementary loan in a third or fourth position. But many times we like to stick with clients that have only one or two cash loans. That doesn't take into play equipment financing, lines of credit. Those are separate. We're talking about structured loans, term loans, things of that nature.
Okay. So tell me, on the working capital side, first let's just talk about the unsecured.
Mhm.
Let me say that again. So tell me on the working capital side, let's first talk about the unsecured funding options that you offer. Give me, I guess, like the best case scenario of what terms and rates could look like, and then what's the worst case scenario, and then why. Like, what would determine the best case scenario, worst case scenario, in terms of rates and terms, as well as amounts, if you
Yeah,
could.
so I'll start with the amount first.
Okay.
That's typically predicated on an average of your last 3 to 6 months of business bank statements.
Okay.
We don't like to really lend a client more than 10% of their gross annual sales. So if you're doing $1 million a year, we're probably going to be in that $100,000
And
space
again,
as
this is
far
the unsecured option.
as unsecured. Correct, correct.
Go ahead.
So unsecured is very heavily predicated on your revenues and your cash flow deposits, etc.
Hmm.
As far as terms and rate, because it's unsecured, I think about it more in terms of a line of credit or like a credit card for the business, although this cash is deposited directly into your account and we don't have any restrictions on what you can or can't use it on. So it's a little bit more flexible than your standard line of credit, your standard business credit card.
Right.
But terms and rate wise, we're really going to be in the 12-month space with that product.
Okay.
That we have no security, collateral, etc. We're probably going to cap you in that 12-month space. Sometimes you can go out to 15 if we really need to maybe get the payment down to where it makes sense for us cash flow wise. And rates, obviously depend on the health of the business, but best case scenario, it's something like a business credit card in the 20s, somewhere like that.
Okay.
And on worst case scenario, you're in the 30s. So
Mhm.
your typical credit card rates for unsecured capital, but it again gives you a lot more flexibility.
Definitely, definitely. And what would you say would be the maximum loan amount on that side?
Maximum loan amount is about 5 million.
Five,
Again, it has to coincide with what the gross annual sales are.
right?
And just to touch back on the pricing a little bit, we do also offer heavy incentives for early prepayment. So in many cases, the year costs 25%, but the customer won't actually pay that because they've paid off within 3 to 6 months.
Got you. Minimum time in business?
1 year for that program.
1 year. 1 year, 3 to 6 months bank statements, minimum monthly deposits.
So for that, there's other lenders that cater to smaller markets in the working capital space. I'd say we're one of the bigger dollar amount lenders. We're really average about 750K, I believe, is what we averaged this year for loan amount. We can go to 5 million. I'd say the minimum that we're going to do is about 250K, meaning that if you have less than 200, 300,000 in deposits monthly,
Mhm.
we're probably not the best fit for you for that program.
Got it. All right, great. Good information. So now let's talk about secured. So what are you looking at as security?
The secured working capital is a much more tailored product that we really dig into each deal very specifically. It really depends what industry you're in, mostly what kind of assets you have to pledge. So I guess two of our main scenarios would be trucking and some sort of a real estate backed collateral. So with the trucking, a lot of the times we'll have a situation where they need, let's say, $1 million for working capital purposes. Again, if it was an equipment purchase, we would do it on an equipment loan because those terms are longer, more favorable, more traditional. But if it's a cash need, trucking company will typically secure a one-to-one based on our loan amount. So if you're borrowing $1 million, we'd like to try and get in and around $1 million of collateral. With the standard sleeper truck, used about 80 to 150,000, depending on the year, make, model. Should be only a couple of trucks. Well, we have a lien on those trucks. Obviously, until the note is paid off, we release that lien. And it's pretty standard. Closing time is somewhere from approval to closing 2 to 5 days. So it's a fairly quick process compared to going to your bank or some other alternative lending source. Another very popular asset class we use for collateral is real estate. Sebastien and I recently worked on a transaction for a hotel chain that we utilized some of his existing properties as collateral. He
Right.
still had a first position on there, but we had a small lien on second position, basically allowing us to get the cost of capital and the term long enough to where it made sense for the customer, which was competitive with other players in the market, and allowed him to cover some gaps in his financing to acquire another two hotel locations. So it really depends on what the situation is, what the cash flow looks like, and what the assets are that we're going to be using as collateral.
So talking about that particular client, the one that we worked on together, it was what, a $1.5 million real estate collateralized loan, right? Working capital loan. Um, why couldn't he get that on his own? What were the circumstances where he couldn't just go to a bank and get that 1.5? And how was it that uh, Lenspark was able to deliver on that for him?
So yeah, actually, we for this type of transaction, we basically filled the gaps in with his senior lenders. So he was bankable. He did have a $20 million financing agreement set up with a local credit union or bank of his, but happened to be about 1.5 to $2 million short. Some unforeseen expenses, just with the acquisitions and just everything, and et cetera. He basically came to us and said, I have bank financing. They're topped out. I have 20 million, but I'm a little bit short. Would you be okay with being in a subordinated debt position? Now, most other lenders, most other banks wouldn't be okay with that. Lenspark being a little bit more high risk. So we said if we can have a second on both of your existing locations, that would help us get to a point where we feel comfortable doing the 1.5 We did this over a 24-month term, but we structured it in such a way. This is what I mean. We tailor every product on the working capital side. We structured it with payments that were staggered, so that basically was almost like an interest only type of payment for the first 6 months while he was really going through the acquisition. Once the cash flow from those properties kicked back in, we increased the payment amount. Honestly, I would believe, though, he's going to pay off in the next 3 to 6 months anyway. So it really worked out for everybody involved.
That's awesome. That's a great opportunity. Great. Happy client. I have to say, we definitely saved the day for
Mm-hmm.
action. So that was great. Um, Anything else that you'd like to share about LensSpark and any other, I guess, just either words of wisdom or just information about the services and products you provide?
Yeah, we're really here at the end of the day when people ask what LensSpark is. And I like to say we help with your bank. We work with your bank. We fill in the gaps. We don't want to steal you away from your bank. We don't want to step on any toes. There's just situations where I have bankable clients all the time that still work with us because the equipment is used. It's too old. It's a cremation machine that they don't like the collateral for some weird reason. The bank doesn't want to do the transaction, and we help them out. And then they also go to the bank to maybe get a line of credit or to get other assets financed. And maybe they're buying a new bulldozer that the bank's going to do at 3%, and we're just not going to be there. But we can help in other ways. And then also we help the small business just starting out, getting first couple of years in business that maybe the banks are just not even giving them the time of day, and we're going to help you get to a bankable position. So we both help, and we both help you get there.
Got it. Awesome. Well, Peter, I want to thank you for taking the time and sharing all this information with me and with my audience. It's great information. We've definitely helped business owners together, and I look forward to do more business with you and bringing more clients to you for 2023. So if you're watching the video, if you like what you're hearing, if this is of value to you, please make sure you subscribe to the channel. Make sure you like and share the video. There's going to be a link in the description below for you to either reach out to me directly or to be able to fill out a form to get in contact with Pete. And either way, we're going to be able to help you to get the financing you need to take your business to the next level. As always, make it a great day. It's the Approved Guy signing out.